Okay, so Mr. Venter, we spoke about short-term insurance for the last couple of weeks. You're now going to go into a few of the more obscure things that are on your short-term insurance policies, like we're going to go and claim for a hole-in-one after today. Okay, so share with us what you've got.
Lourens, let's start off with the whole concept of liability. Now, to understand what and who is covered under liability, we have to take a couple of steps back and understand our discussion concerning parties to an insurance contract. Now, not going into the whole policy owner and who's the payer and so forth, there's two very important concepts we have to understand, mainly being who is the insured and who is the co-insured. So the insured would be the person in whose name the policy is, you for instance. A co-insured is usually somebody who's automatically included in the policy. For instance, your wife and your underage children.
Okay.
So those people are automatically included on your policy. That's why your household contents, for instance, you're not insuring just your stuff, you're insuring your wife and kids' clothes and toys and bicycles and all of those things automatically. Also, our conversation about insurable interest, guys, go back and listen to the previous shows. It's very, very important information. Insurable interest, you have an insurable interest in your children's laptops and bicycles and so on and so forth.
Yeah. So just to refresh, insurable interest is you have to have suffer the financial loss to be able to insure something, to
Correct.
have an insurable interest in something.
Correct. So when it gets to liability, what we're looking at, and our discussion concerning third-party insurance on vehicles is an extension of your liability cover. But liability cover is also attached to your household contents and to your building more specifically. So liability cover would cover any time a person suffers injury or loss because of an item you own, for which you are responsible. So I come and visit you, there is a splash of water on the floor, I slip and I break my leg. I can potentially hold you legally responsible for it, for my medical bills, pain and suffering, all of those things attached. So liability cover on your short-term insurance cover policy would cover those types of eventualities. It would also cover, for instance, me visiting you and the roof collapsing, and myself or items in my care or your care which belong to me gets damaged. Again, liability would cover those things. So are you liable for the financial loss that a third party, somebody else, suffered?
Okay. So if I bring my laptop to your place and we work on it and then we go and have a braai and we get robbed, would that be part, or would that more be covered under my specified all risk? If I don't have it specified, would I be able to claim from you?
Another important term we have to understand is the concept of not being insured elsewhere. For instance, your laptop. If your laptop is insured on your policy, either under the household contents section or under the all risk section, and you bring it to my house, then you already have cover for that eventuality.
So you already accept the responsibility if something happens.
Correct. If, however, your laptop or your TV or your projector or whatever you bring to my house gets damaged or stolen, and you do not have any cover for it anywhere else, then you can hold me liable for it, because I was the person in whose care that item was.
Okay.
And thus I can claim under my liability insurance for your loss.
Okay, and maybe just at this point, because we talk about not being insured elsewhere, talk a little bit, or tell people a little bit about how it works when you do have double insurance. Because it sometimes happens, people forget to cancel one, they take out insurance from another company, and then they get into an accident or something. How does that usually work?
Again, there's a difference in having double insurance between the short-term insurance structure and your long-term insurance structure. Just a quick recap on long-term insurance. When we're referring to long-term insurance, we're talking about life cover, disability, and all of those things. with those types of policies, you can have life cover at more than one company. You can have funeral cover at more than one company, and all of those companies would pay out in the event of an insured event. Short-term insurance and medical aids work completely differently. You can only insure an item at one insurance company and claim from that one insurance company. The reason for this is a term we call enrichment. Remember, we've spoken previously saying that the goal of insurance, or the purpose of insurance, is to put you in the same position you were before the loss.
Yes.
So if you insure your laptop or your car at two different insurance companies, then you are enriching yourself by claiming at both companies. You are now in a better position. And that has serious legal ramifications.
Yeah.
They can sue you for that. So what would happen if it's discovered that an item is doubly insured? Is that both insurance companies would be responsible for half of the loss. So insurance company 1 would pay out 50% of your laptop, insurance company number 2 would pay out 50% of your laptop. What they also do is insurance company 1, where the item was first insured, would pay out the claim, and insurance company number 2 would have to refund a portion of your premiums in order to make certain that you are not in a better situation.
Yeah, so you're back to where you were.
Correct.
All right. Okay, so that's with double insurance. So if you do realize that you are double insured, you are not going to go to jail immediately. Pause go, not collect 200 Rand and just go to jail. Yeah, there will be a negotiation between the two insurance companies, and each will be liable for half of it.
Correct.
And you'll get some refund on your premiums as well.
Remember, short-term insurance is not a savings product.
Yeah. So a few people do use it as a savings plan. They put some money into their short-term insurance premiums, and then once a year they claim all of that back. So yeah, that's not how short-term insurance is supposed to work. All right. So guys, again, if you have any questions, you are welcome to give us a shout out online. We are here to answer all those questions. And then, you're welcome to follow us on Facebook, Retire Happy, Instagram, I Retire Happy, and then also YouTube, Retire Happy. Okay, so that's liability insurance.
That is liability in a nutshell. Remember, liability being anytime you are financially liable for the loss of injury of a third party, be that because of your negligence or because of omittance or an accident.
Okay.
So under your vehicle, under your household contents or building section.
Okay.
Very important again, it's not only cover for yourself but also for your co-insureds. So if your wife drives the vehicle in an accident and it is found to be her fault, liability would cover it, your third party insurance.
Okay.
If your son is busy riding his bicycle, he hits one of your guests while you're standing next to the bride, that guest is injured, again, it's covered under the liability section.
Okay.